All right. Hello. Thank you for coming. Um, sorry, my dog needs to go to the vet, so I was setting that up. I'll go over dollar real quick again for people who missed. In short, I think dollar's just going to keep going up. There's really no reason for it to be stopping yet. We are in a monthly fair value gap, so until I see like a 4-hour SMR, like a daily swing high, I'm bullish on dollar. Now let's hop into indices. All right, as far as the monthly goes, in terms of the monthly, I will be looking for the lows to be taken as our monthly objective. Whether that comes in the beginning of the week or the end of the week, I'll be being nimble as such. But I do think the sell side liquidity pool is our monthly draw. In terms of monthly, we have outside liquidity being taken here, coming down here, outside, outside, outside. We just saw inside. This is going to be the same as the weekly. So now we need to seek outside liquidity again. So outside liquidity will be here prior to an extended or not so extended pullback into the range. Weekly is just a cleaner picture of what I just said. Inside liquidity here, outside liquidity is next. And this is a relatively balanced price range. As we see, this fair value gap right here was hit. So pullback area after this to be taken, this sell side liquidity pool, I would be looking into this area. Possibly. Things to consider are just like the global economic spectrum right now. There's really no reason for equities to push up. Just thinking practically, money supply out of control and is turned off right now. The dollar is going to the moon. So risk off scenario, there's nothing fundamental changing about anything right now. So there's no reason for us to be going up to make new highs of any sort anytime soon. As far as the daily, like I said, sell side liquidity pool, and then we'll be looking for inefficiency. So like this could be important when we come back up, or this candle right here is what I'll be looking for. And this big gray box on the bottom there is just a 3-month FVG. I just don't have it labeled. But below sell side liquidity pool there, I will be looking at this 3-month fair value gap as a place for a bounce. SPY is pretty much the same thing. Sell side liquidity pool is what I'll be looking for. I know this is kind of jumbled right now. This sell side liquidity pool is what I'll be looking for. We didn't take it. We got very close, and they could engineer some liquidity here prior to this being taken short term this week, but I don't see that happening. I really think we're just going to get a straight shot, and then if we come back inside this fair value gap, same thing with NAS, even though this is much larger for now, and this candle, but this entire range is balanced. This range is balanced, and this range is balanced. So another area to highlight along with this candle right here is the BPR going across, because this should be a sensitive area. That along with this candle would be nice. AU. As far as majors go, I took you guys through my pre-weekly forecasting last week for all of this, and my objectives have all been reached. How we got there was a little bit different. I really expected a little more pullback early in the week, which we didn't get, unfortunately. But nonetheless, we look forward. As far as weekly objectives, like I said, I see dollar continuing to go up. So we're going to be looking for, let's see, monthly. So this is an order block right here. On the monthly, what's the range here? 50 pips. All right, so we can see some bounce in this area. Potentially moving forward, that would be target number 1 for the week to the downside. I'm really not positive how we're going to get there. I will get a better idea come New York session tomorrow. Just as like a rule of thumb, I really don't trade anything before New York session on Monday. And even if it is, I typically stay away from Mondays. Most of what I'm looking for in the week will be confirmed by Tuesday expansion outside of Monday range. So unless I see something that really jumps off the page at me, I typically won't be trading on Mondays. Things to consider: if we do have risk off to start the week, could take us down here. And then we can come back up to the end of the week for this monthly close candle inside this monthly fair value gap. That is something, if you trade AU, definitely something to consider, the monthly close relative to this fair value gap. Okay. That's really all I have here. Majors are pretty much all gonna be the same. The dollar has really just been a super dominant, like the dominant currency, and that's derived of our interest rate being the highest, and also the bond market being relative 4%. As we see, it's just instant weakness. There's nothing to push up. EU, relatively the same thing. I don't have levels plotted here. We have this 3-month fair value gap. That'll be something to watch as the week starts. Huge range in the fair value gap. So I'm actually going to plot the 50. So inside this fair value gap, you have sensitive areas, consequent encroachment, or the 50% of large areas or blocks, breaker blocks, fair value gaps. These are other sensitive areas as well as the extremes. That's why I'm annotating this, just so everyone knows. But like AU and similar to what I'm going to say about GU, I'm really not looking for anything to change here. As we see, like there's just no willingness to come up. Even when we have our push, it's just to rebalance the range and come back down. I do think we're going to start seeing some reaccumulation in this area, similar to like we've gotten here and here. And you know, let's just humor us for a second. Let's see if this is a mirrored move. Where's my one? Yep, so just to mirror the move, the last leg here puts us, you know, at the top half of this fair value gap, which is a decent target as target 1. If we start to catch some low time frame sells moving into the week. GU, really nothing to say here. We had an absolute bloodbath on Friday. And I mean, parity looks like it's coming on the chopping block. We'll start the 3-month. So realistically, the only thing I have to annotate here is the all-time low above parity. There's going to be little to no price between here and there. Something else you can annotate is this. This is a rejection block here. So this candle open will be a sensitive area to price moving forward. if you're looking for levels that we can get bounced and then internal range off of, then this is filled. So we're going to take this off. Actually, we're going to leave this. We're going to leave this. I am going to change it. My void color. Void, this can be used as resistance later on during the week. Something else I'll be looking at for resistance if we do get an extended pushback up is this right here. Rejection block here. As we saw, this is why you see this rejection here, the rejection block. That's why we had this low time frame reaccumulation right here prior to the down move. So that's how you should be looking at PD arrays, where you see one PD array, whether you're looking at a range, you're likely to see a mirror to the other side of the curve or reaccumulation in that area. So yeah, in terms of majors, with the USD as the quote currency, sells for me until I see a 4-hour SMR or a daily swing high formed on dollar. I'm not going to bet against it, and I don't suggest it unless you're really moving into the lower time frames, 5 minute, 1 minute, until you see those high time frame confirmations that we will get some distribution of the push higher on dollar. UCAD. Monthly, okay. This is kind of interesting. We do have a pair of fair value gaps on UCAD. We have a pair of fair value gaps on UCAD. These will be my draws. Time frame. Also inside this monthly BPR. See if we have an order block on the weekly. So yeah, I'd be leaning towards this top one here as a draw because we have buy side liquidity pulled here on this swing high here with the fair value gap above, as well as the order block. See how this is the last up close candle before the down move. Did we take out liquidity? We did just miss liquidity, but we took out this liquidity pool. So this is still, to me, an order block, even though we didn't take out this swing high. So yeah, as my draw, I would be aware of this for some low time frame retracement into a higher time frame PD array. Maybe we come here, tag this fair value gap to take us back into this newly created range down here prior to going back up. And just like the dollar, there's really no reason to be betting that this will come down until it reaches an objective, this being objective 1, and then we'll look at something in this range. This will be your dealing range on the daily. I don't think we'd find a discount here. Just based on the way the dollar is behaving, we're like very blow off top type of price action right now. So just as fast as these prices are moving up in dollar base currency pairs and down in dollar quote currency pairs, the equal and opposite is going to happen eventually. And I say eventually because we don't time these things. We don't know when these things are going to happen. That's a shift in like economic policy and stuff like that, when the Fed thinks that we are strong enough, high enough in our basis rate that we can still maintain inflation and decrease inflation, while other countries also raise their rates. Now we see that those currencies will strengthen against the dollar, thus bringing the dollar down. No, no. So the way pricing and this number you see here on DollarWorks, and I'm just going to move away from currencies and indices because I gave you what I'm expecting for the most part. Nothing specific, because there really is nothing to tie too specific to on dollar besides it goes up. But the way this number works, how we get to this price, right? Dollar is compared against a basket, quote unquote, basket of currencies to get you the relative strength of dollar, right? So we're compared to currencies like euro, pound, Swiss, yen, stuff like that. Now, why does one get stronger against the other? You could say buying and selling, but no matter who buys and sells what, we cannot move this market. This is the global monetary market. So massive banks and institutions and like global businesses do transactions through this market. So there's no way that buying and selling is going to be doing that. But something that is very key to pricing is interest rates. So in short, and this is in month 3, I believe, of ICT's core content. If you aren't through the 2022 series, I don't suggest you moving into the core content. And even if you are through the 2022 YouTube series, I suggest you get very well versed with managing and executing that system prior to expanding your knowledge. But higher interest rate means higher currency. And dollar, the US has been most aggressive with raising our interest rates against inflation. So our currency is going to be exceptionally stronger. Now, something to note, you will see other currencies coming out with higher interest rates. Now that will help their currency. But if we're looking at our interest rate in comparative to another interest rate, ours is still much higher. So fundamentally, USD should be stronger than pretty much every currency, just based on the fundamentals. Technicals, there's still the manipulation and stuff like that, and the technicals come into play. But fundamentally, there's really no currency that should be stronger than the dollar, high time frame, right now, based on fundamentals. Questions? Want me to look at something to go over? Don't be shy. No? All right, that is going to wrap it up for me. I'll close this. That wraps it up for me.